Hello fellow investor, in this new video I want to show how easy it is to start a dividend investing portfolio in order to get advantage of what is called the compounding effect, which probably you know also under the name of the snowball effect. If you follow me, you know that I'm a strong dividend investor. More than 40% of my net worth is into a dividend portfolio. So I really believe that investing for dividend is the right way to go. Unfortunately, there is a lot of misconception about dividend investing. Some people think that is only for investors which are near retirement, so let's say old people, or some other think that you need to be very rich in order to be successful dividend investor. From my point of view, both of these theses are wrong, and the key part of any dividend investing, but in general of any investment, is the time. If you are in the game for the long run, dividend investing is something that will work amazingly for you. During the course of this video, I will show some different simulation where you can see exactly how dividend investing work and how this snowball effect enter into the game when we start to pass 5, 10, 15, 20 years or something like that. At the same time, I will also show some snapshot of different of my brokerage account where you can see how I set up my investment and how I'm taking advantage of this snowball effect. So let's start taking a look of Dividend Watch right here. This is a website I really like. I keep my portfolio tracker with this website. I mean, I use a lot of different websites like Seeking Alpha, for example, but for this video I want to show in Dividend Watch. This is my portfolio. Okay, I don't want to enter too much into the detail. I want to show you this page right here, which is called the dividend calculator. So if you want to start an investment and let's say you have only $1,000 to start your investment, I don't suggest to buy individual stock. It's better to buy one ETF. In this case, I will search for a CHD. A CHD is an ETF from Schwab, which is focused on dividend aristocrats. So this is the closest ETF that can get to a dividend portfolio. I mean, you can have a dividend portfolio like I am with 50 different stocks, dividend aristocrat, this sort of stocks, or you can buy the Schwab US dividend equity, which at the end will return pretty much the same of this portfolio. So if you don't want to pick so many stocks, also because you don't have a lot of money, this is the way to go. So we select here, right here, the ETF in this case. We see that it gives a dividend yield at the moment of 3.6% with an annualized growth of 8.12%. So this is the growth of the dividend. So the company inside this ETF increased the dividend in average a little bit more than 8% a year, with a share price of 73, and also here they give the hypothesis, this is a make on market average, a growth in the price of the ETF, so in the price of the stock, of 5%. So let's say, for example, we want to buy 15 of this share that are a little bit more than $1,000, $1,100. So this is like our basic investment. But I think that this number right here are a little bit too nice. I will make something a little more conservative. For example, let's make the price annual growth is okay, 5%, but annual dividend growth, I will pick something lower, like for example 6%. In such way, we are a little bit more prudential in our analysis. Let's remove any monthly investment. Let's not put the dividend income tax in the equation because I don't know from where you're watching. Personally, I'm in UAE. I would have 30% income tax. I mean, it's not income tax, it's dividend withholding tax, but okay, it's not important. But depending from the country, you can have different numbers. So let's leave it at 0. And let's calculate with an hypothesis of 20 years of investment. So this is an investment over 20 years. We invest only $1,100 at the beginning and we don't touch our investment at all. For the first analysis, I will remove the DRIP, the dividend reinvesting plan. I will explain later why. So let's see what it came out. According to this is a mathematical calculation. The Dividend Watch is not giving us anything new. I mean, it's just making a calculation. So he predicted the value of our portfolio will grow after 20 years to almost $3,000. We'll almost make $2,000 extra from our investment thanks to the price appreciation, that was the 5% a year. And this is the annual dividend. We will start the first year with $38. We will end up getting 115 after 20 years. It's not so exciting, I know. Anyway, here is the breakdown. You see 2023. Okay, the number is a little bit lower because it's until the end of the year. Now we are in June, so it's half of the year. But anyway, you see that the annual income keep increasing because, as we say right now, the dividend yield grow of, let's say, average of 6%. And also the portfolio value will increase. So we end up getting 150 dividend per year, and we will have an investment of roughly $3,000. Okay, not very exciting, but let's take a look at what is the compounding effect in the moment we decided to reinvest our dividend. I need to do the exact same. I don't touch any parameter. I will just switch right here the dividend reinvesting plan on. Let's have the calculation done. The chart looks similar, but we can see already that the numbers are quite different. Because we reinvest this dividend, it means every time we receive a dividend, automatically we buy more share of SCHD, and we end up, in fact, having, it will not tell us how many shares we have at the end. Okay, this is a pity, they could show it. But anyway, our investment will be worth almost $6,000. So in 20 years, if we reinvest our dividend, the result is almost double, because the value of the portfolio will be $6,000 against the $3,000 we checked before, and the annual dividend will grow in order of 225. It's not double, but it's a mere 90% more. Why is that? Because this is what is called, I said before, the snowball effect. It's like a snowball, no? Because every time you receive the dividend, you reinvest in order you have more share of the same ETF, and the next year you will get paid more dividend, and so on and so on. And you see the difference is not that big. So let me show 1 year the other, the two investment. On the left side we have the one with the dividend reinvesting plan. On the right side we have the previous one. You see that on the short term the difference is not that much. You see the first year the value of portfolio is the same, also the second year. After you start to have a small difference only $100. You see, not much, but as soon as you go down with the years, when you approach the 20 year, the difference is huge. Here you have dividend. You have a portfolio value that is basically go up around $100 a year, which is a 5% increase we set up as a price increase of the share. But right here, it accumulates so fast because you are investing the dividend. You see the difference is huge, and this is on a mere $1,100 investment, which is nothing. And really, this is a basic investment. Investing only $1,000 and don't touch your investment for the next 20 years. This is a bit lame. Is not how you should invest. But this is just an example. Because in my opinion, and this is not just my opinion, what you have to do is to start in this way. But you need to set up, you see, like this additional investment per month. You need to set up a certain amount of money that you can pull in this investment every month. Let's think a simple $100 investment per month. So you keep exactly the same parameter with the DRIP, so dividend reinvestment plan, but we automatically invest $100 inside the same ETF every month. Let's make the calculation and you see that the number will change dramatically. We end up with a portfolio of $73,400 and we get more than $2,700 dividend per year, which is roughly around a little bit more than $200 a month, which is not bad at all. And this is a mere investment of $100 a month. It's nothing. So this is what we call the compounding effect. This is what we call a dividend investing plan on a very long term. I can show you right here on my live account on Trading 212. I never showed this before. This is I started when in 2020 when I started on TikTok or stuff like that. I didn't experiment. I created what is called a pie. A pie in Trading 212 is a sort of automatized investment. So you set up which stock you want in this pie. In this, let's say, it's like your personal ETF. I set up how much money I wanted to invest, and that's it. I let it go. And this is my core investment. You can see here in 1 year, you see it go up almost every month, because of course even in the bear market you may remain flat because I keep investing $100. This is my holding at the moment. I hold 3 ETF inside this pie: the Vanguard S&P 500, Nasdaq 100, and emerging market ETF from Vanguard. 50% to the S&P 500, 30 on the Nasdaq 100, and 20 on the emerging market. So as you can see, the return for the moment is positive. For the first two is lagging behind the emerging market, mostly because of China, but it's okay, it's not a big problem. And this is the auto investment. You see, this is my credit card. Next deposit, 6th of July. The 6th of every month, Trading 212 take from my card $100 and deploy in this investment. This investment is supposed to end in 2023. This is so after 9 years, I should have contributed around $10,800, and I should have around almost $20,000. So this is how I arrived at the moment. The goal was to arrive to 27,000, but with the current market, let's say my forecast will be 19,000. This is perfectly fine because we are just exit maybe from a bear market. So the performance of my investment was not amazing during the last year and a half. This is why the system is showing me that I will not probably reach 27,000, which is my target. I will probably go lower, but it's not important. It's only 3 years, but we have a span of almost 10 years, so we'll see how we'll go further. So this is a very simple system that everybody can use it. If you don't want to use Trading 212 for any reason, I know it's in a waiting list if you want to open an account from the UAE. I don't know about Europe. But let's check, for example, Baraka, which is one of the stock broker I review, and you can find the review right here. We can just enter. This is my portfolio. In this case, I didn't set up any automatic investment in Baraka. Here I bought all different stock, like you can see. Actually, the return I am having is pretty good. You can see right here, it's almost from beginning get around 22%, which is not bad at all. So anyway, we can just set up, first of all, the DRIP, the dividend reinvestment plan. For me, was already set up, but just go there and you have enabled. This is the same thing you can find in any other broker. It's just a button to set up DRIP or not DRIP. You need always to do it. I showed it before why. And here I just need to make an auto investment. So let's set up an auto investment. Let's decide which stock or ETF, in this case SCHD. CHD, this one is the one we saw before. So I can say that I want to invest $100 every month, and I want to start beginning of the month. So in a moment I will confirm. Now I will not do it because I don't want to do it from Baraka, but in a moment I will confirm. Automatically I will start to buy $100 share of SGHD every month at beginning of the month. And that's it. This is my investment. I need to forget about everything. I don't need to look at my portfolio every 5 minutes. I just need to wait 10, 15, 20 years. If I can, I need to increase this number. I need to start to put $200, $300 a month, depending from, of course, your budget. But you should try to increase always as much as possible. After 10, 15, 20 years, you will thank me, because the result will be pretty amazing. And we see it right here. More than $200 dividend per month. It's not a joke. It's quite good. You can retire with $200? Probably no, but here we made an hypothesis that you contribute for the next 20 years only with $100. I suppose that in the next 20 years, probably your career, your salary, or whatever, how you make money, you will start probably to get more. You will get a raise, you will change job or whatever. The same thing you will start, for example, if you arrive to $250, the numbers change dramatically too. So the final number will be around $175,000 of your portfolio, the value of your portfolio, and you will get $6,500 per year in dividend, which is more than $500 a month. $500 a month can be the price of the rent, just saying. Dividend investing is an effective way to make money, it's a proven way. So many successful investors started like this. Yes, maybe they have more money than you. They can instead invest $300, $500, $1,000, $5,000 a month. Of course, you don't need to make a challenge with them, but your result will be pretty much the same in terms of percentage. So the real key here is start early, be consistent, and keep going with your investment. Don't withdraw the money. Don't sell out the first time you see the stock go down, or don't sell when you think the price is too high. Just close your eye, remove all the noise, don't read the newspaper and other stuff, just keep investing, follow your plan, and you will see the result will come. I hope the video was not too boring, and I hope it convinced you in some way that the compounding effect is something amazing that you can make through your investment, and that you need time to do it, because nowadays people search very high return in a very short time, and this is quite unlikely. But if your time horizon is in the order of 20, 30 years or something like that, especially if you are young, if you are in your 20s or early 30s, you have a lot of time in front of you, let's hope. Starting a dividend investing portfolio can be really good for you right now. It's a solid choice. You will thank me in the next 10, 15, 20 years if I will be still here on YouTube. So let me know what you think. If you have any question about how to start, how to set up this investment, you can check other review I did about different brokerage account, or anyway you can leave me a comment. I will try to help and to reply, and see you to the next video.